The upside, chemicals, the biggest gaining sector this morning. Let's turn to renewable energy, and the European index is down 27% from a record high in January and is trailing the broader markets and oil stocks. That's as rising bond yields and inflation have pushed investors to switch preferences to cyclical and value stocks and away from growth and defensive equities. Let's talk to Vincent Juvens, global market strategist at JP Morgan Asset Management. Tell us how you place renewable energy stocks then, Vincent, within all of those various categories, because it sounds like growth, but it's not technology. There's something much more secular going on when it comes to this sector. So I wonder how it fits in with that move into cyclicals. Tell us how you would position around renewable stocks.
There's definitely a secular story, and admittedly last year prices of renewable across Europe went probably too high at some point, which explained why obviously they're a bit under pressure this year. But clearly the secular story remains intact in our view. It's a broader theme, climate change, than only renewable, we would like to mention. But obviously we have the US back, let's say, supporting global climate engagement. We have the COP26 at the end of the year, which is likely to lead to a grand climate accord, and countries around the globe are committing to net zero target by 2050. This means that the share of renewable in our economy will have to move up from less than 20% today to 80–90% by 2050. So this is really a structural support for this sector, which is clearly part of the solution. This said, when we look at climate change as a whole, as an investment theme, renewable are one of the items, but it doesn't mean that the traditional energy sector, that utilities don't have a role to play either. We just see that indeed the whole sector is adjusting itself to this new reality, as actually the firepower also to invest in this transition. So that's also one of the key elements we are looking at. More broadly, climate change and policies to address climate change mean that we will see higher carbon price globally. I discussed inflation a couple of minutes ago. We've defended the idea that we see it as a transitory phenomenon. There's something which is structural within inflation. It's the higher carbon price. It's not going to go away. What we are seeing in Europe, record carbon price since the beginning of the year, due to let's say the extension of our emission trading system, is something we are likely to see globally, because Europe will force let's say its position during the COP26, so we'll at least try to convince its partner globally that carbon price needs to be revised up, either directly or indirectly. Europe has a legal tool to force its commercial partner to really adjust their carbon price, which is a carbon border adjustment mechanism. So our expectation is for a higher carbon price. Renewable are a solution, but across the board, we're looking at reduce the carbon footprint of our portfolio.
Let me just ask you about something else, just breaking across the Bloomberg, Vincent. Very interesting, your thoughts on the emissions trading system and how it's being copied in various parts of the world. Let me ask you, though, about trade deals, because we've just had confirmation from the Australian government that the UK and Australia have reached a free trade deal, so confirming the Australian government spokesperson confirming a free trade agreement with the UK. We'll wait to hear from the UK side on this, but we know that the UK and Australian Prime Ministers had a dinner over which this was discussed last night. I wonder how much significance these kind of trade deals can play. Clearly, there's a lot of focus on the UK trying to redefine itself on the global stage post-Brexit. But the Australian deal, we understand, is expected to boost the size of the UK economy by 0.02% over 15 years. This is not huge, is it? But is it all about symbolism, Vincent?
Yes, at least versus a year ago, where we were discussing Brexit, trade tension between China and the US. We are again discussing about a more multilateral approach between Europe and the US, between the UK and several key partners. And it's indeed important for the UK to re-establish this trade deal that it is losing at the moment due to the Brexit. So all in all, obviously, this is a positive development for both economies, although obviously it won't, let's say, compensate for the loss which is driven by Brexit, nor for the UK, nor for Europe. So it is obviously a positive development. It's not the only positive development that we are seeing on a trade basis. So clearly, the improving trade situation that we're seeing globally is one of the elements which make us positive for the coming month in terms of economic expectation and in terms of positioning in our portfolio.
Yeah, really interesting to put it in the global context there of reduced trade tensions then, Vincent, and we look to the EU-US summit to see if we get any further news flow on that front, either very broadly or specifically around Airbus-Boeing, which looks as if there is a deal that can be done there. Now, Vincent Youvens, thank you very much for joining us. Good to speak to you. Vincent Youvens, Global Market Strategist at JP Morgan Asset Management, spending the last 20 or so minutes with us here on the European Market Open. Let's get a Bloomberg Business Flash, the top corporate stories we're covering here at Bloomberg TV. Here's Simone Foxman.
Thanks, Anna. Emirates Group slumped to a record $6 billion loss in the financial year to March as the pandemic upended travel. The state-owned airline received a capital injection of $3.1 billion from its owner, the government of Dubai, as a result. Emirates has been hit especially hard with the pandemic-related border closures. JP Morgan's expecting a 38% trading revenue decline compared to a year ago, more than previously expected. It's a sign the pandemic-era trading boom could be drawing to a close. At a virtual conference, CEO Jamie Dimon said revenue would now be just above $6 billion.
Last quarter is exceptional. This quarter is what I call more normal, where you can plug in your model and make it really simple. It's like something a little bit north of $6 billion. Which is still pretty good, by the way, and probably better than we told you last time. But last time we said more like 2019. I forget what that number was, but plug in a number a little bit north of 6.
That's your Bloomberg Business Flash. Back to you, Anna.
Simone, thank you. Simone Foxman there with the Business Flash. Coming up here on this programme, a resolution after 17 years of dispute. The US and EU agreed to end their dispute over aircraft subsidies. We'll bring you the details next. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Welcome back to the European trading session, and European equity markets doing the best of the majors, up by 0.7%. President Biden is still in Europe, set for his first summit with the EU today. Yesterday saw a meeting of NATO with the alliance warning of China's growing military power. We're joined now by our senior writer, Stephanie Baker. And Steph, good morning, before we discuss NATO then and some of the news that came out from that, we just had these breaking news lines this morning. The 17-year Boeing-Airbus dispute seems to have been resolved. It comes ahead of today's US-EU summit. What more do we know about that?
Yeah, this was one of the many hangovers from the Trump era, when the U.S. imposed tariffs on EU exports over Brussels' support for Airbus, and then the EU responded in kind with tariffs, sparking a kind of mini trade war. They appear to have agreed